Hello and welcome to GST revision class for lesson number 15, Basics of GST. We have just finished covering this entire chapter in our GST Fast Track series, which is going to cover your entire GST and customs laws in less than 25 to 30 hours. This video is going to be a capsule video which is going to help you prepare one day before the exams. So this video is going to be very quick, exam oriented, and just enough for you to revise in the fastest way possible. So are you ready? Yes? Alright. So should we start? So this is on lesson number 15. This is one of the most important chapters because it builds a foundation for all the other chapters. It starts with what is GST, features of GST, and everything that you need to know for the basics. Yes, so all your eyes on the board, and I want you to be all ears because I'm going to be very fast and quick, just enough for you to revise quickly and move forward. Let me tell you, this will not have in detailed conceptual explanation only because of paucity of time. This video has been exclusively recorded for you to quickly brush through the syllabus for whatever you've already read, or refer this, look into this video, and then you can start reading, because it's like warming up the oven, right? Before you bake, you have to warm up the oven. So you can use this video as, you know, a starter to get ahead with your studies, or you can use this for your one day before exams, or whenever you're walking, or whenever you don't feel like actively studying, you can put this on and keep listening to this so that you'll be passively studying. Fine? Yes. So starting with this chapter talks about what is GST, right? GST is a destination based tax, consumption based tax. Means what? If I'm selling something from Karnataka to Tamil Nadu, where is the consumer located? So the consumer will be taxed under GST. So the destination, the consumption based, whoever is the consumer, GST will be levied on that person. So first is consumption. Next, single unified tax on every addition. We know earlier in the pre-existing laws, that is prior to GST, there were several indirect taxes, but now it has become one tax, one nation, which is GST. So single tax. Tax on what? On every value addition. What is value addition? So I will be very quick. So let's say your cost is 100 rupees and value addition 20 rupees is your margin, and you are selling the product at 120, effectively, if you look into it, GST will be actually levied on the margin, on the value addition that you're making. Next, right from manufacture to sale to consumption of goods and services, this is a continuous chain. Fine? Yes. Next, continuous chain of tax credits. What is tax credit? Whatever taxes that you've earlier paid, you can claim credit of the tax. Means what? Let's say you purchase something worth 100 rupees and you paid GST worth 20 rupees. Now, you're selling something worth 150 rupees and you are supposed to pay GST to the government worth 30. So, you are supposed to pay, this is your output tax liability, you are supposed to pay 30, you've already paid 20 rupees when you purchased. So, you can set this off and then this will be your final tax. This is called the tax credit mechanism, which we'll be studying entirely in our ITC chapter. GST network, it is like a website which helps you connect on a technological platform. What does it help you? GST network processes GST processing system. It is a shared IT infrastructure. If you do www.gst.gov.in, you'll go to that website. What does it help you? It will help you in registration, filing returns, and looking at your reports, computation of tax, matching engines, tax payments, settlements, everything that's going to help. So these are the main three biggest features of GST. Next, dual model of GST. Who has the power? Who has the power to levy GST? So both central government and the state government have the powers. So let me just zoom this for you. Okay, dual GST model, not just state government, not just central government, both of them, dual powers. So that is why it's called dual GST. Next, what is interstate sales and what is intrastate sales? Please look into the board. Intrastate means what? Whatever is within. If I'm registered in Karnataka, I sell in Karnataka within the state, within the union territory, okay, if it is within the union territory. But if it is, let's say, Karnataka to Kerala, then this is crossing the boundaries of the state, it's going to be interstate sales, okay. So on your intra-state, whatever is within your state, CGST and SGST will be levied. On your interstate sales, IGST will be levied. Okay. Now, IGST is going to be levied on your interstate sales, right? So generally the rates are 5%, 12%, generally 18 and 28%, right? So out of this 5%, 2.5%, 2.5%, let's say half will be CGST and SGST. But whenever you look into IGST, this whole rate, which is actually a addition of both CGST and SGST, will be levied as one rate, and IGST will be levied on interstate transactions. Okay. For your intrastate, CGST, SGST will be levied. Cross utilization of credit. What do you mean by cross utilization? I told you, let's say in my example, 20 was your taxes that you paid earlier, 30 was the taxes that you have to pay now to the government, right? So in your 20 rupees, let's say half was CGST and rest was your SGST. So they're telling you, you have 10 rupees of CGST credit and 10 rupees of your SGST credit. Can you utilize one against each other? No. Your CGST and SGST are not friends. As simple as that. Let's say you have this credit of CGST. How can you utilize? So CGST, please understand, will be used for your own house. If you have something, you will use it for yourself first. So CGST first will be utilized for CGST, then you can utilize for IGST. If you have to pay anything under IGST, utilize this credit for payment of IGST. Then SGST also same. SGST, again, use it for your own home first, and then if anything remains, pay for IGST. Okay, but this and this cannot be utilized for one against each other. Now coming to how can you cross utilize IGST? Same. First, if you have any IGST credit, utilize for your own self first. And now, since IGST is a central tax, as in it is levied by the central government, it is an interstate sales. So this does not make any distinction. So it says first you do IGST, second you do CGST or SGST in any manner. Okay, doesn't give anything very particularly. Cool, are we good? So the takeaway from this is CGST and SGST cannot be used for one another. CGST, SGST utilize for each other first and then apportion to IGST. Can you please look into this table? So it says the same. Fine. Alright. So this is a revision video. I'm still trying to explain a lot of things, but I want to be really quick. What is intrastate? I told you it is within the state. What is interstate sales? So interstate supply. So these are the things. Domestic, again Karnataka to Kerala, domestic interstate sales. Next, if at all you import certain goods or services or you export anything, that will be coming under IGST, that is your interstate sales. So any category of import or in your export, what does this term export consist of? Anything outside the country. If you sell anything outside the country, okay, then supplies to and from SEZ, SEZ means special economic zone. If at all, let's say there's some special economic zone in Kandla, Gujarat. From Karnataka, you sold something to Kandla. Though, you know, Kandla is outside the state, all that is fine. But since it's in a SEZ, still it will be a interstate sales. Let's say same, you're a supplier in Ahmedabad. Now you sold to Kandla. Kandla is also in Gujarat, Ahmedabad is also in Gujarat. So even though if it is the same state, but this is to an SEZ, so it will be constituted as an interstate supply. Please get this right. To and by an SEZ. Next, non-intrastate sales, whatever doesn't come on the above categories will be an interstate sale. And then if you are making any supply to international tourists, then also it will be considered as an interstate sales. Are we good? Yes. Cool. Next, supply in territorial waters. Simple example, this is India, don't judge my drawing. Okay, and let's say this supplier somewhere here, okay. Let's say he's somewhere here. So the closest state, let's say, is Kerala here. So where will the location of supplier be? Closest to the territorial state. In this case, let's say he's close by to Kerala. So the place of supply will be the closest, nearest coastal state or union territory. So if he sells something here, you know, in this place, if he sells something here, which state should you take? You should consider the nearest coastal state. Fine. Now, talking about Union Territory GST. What is UT GST? We all know what is a Union Territory. Here, these are the 4 Union Territories, or let's say these are the names of the Union Territories that we have. Just for remembrance sake, I've just kept this as Dal Chawal. D for Dadra and Nagar Haveli and Daman and Diu. D. A for Andaman Nicobar. L for Lakshadweep and Ladakh, and C for Chandigarh. So these are the names of the Union Territories in India. So anytime these names are given, you will be applying UT GST and not a SGST. SGST is only limited to states and not for Union Territories. Applicability of UT Union Territory on Jammu, Kashmir and Ladakh. So here we are saying, so what is a Union Territory? Union Territories will not have their own state legislatures, okay? But Jammu and Kashmir, though being a Union Territory, has its own state legislature, and if it has its own state legislature, you will levy SGST and not UT-GST. So only for Jammu and Kashmir, you are levying state GST. Are we clear? Okay. But Ladakh, you see, Ladakh has a union legislature. That is why you are applying UT-GST. Now, let's say this is Jammu and Kashmir, which we know state GST is applicable. You sold something from Jammu and Kashmir to Ladakh, or you sold something from Ladakh to Jammu and Kashmir. So here what is applicable? SGST is applicable. Here what is applicable? UT-GST is applicable. So these both, you know, you will charge IGST along with this. Okay, so since this both is not Union Territories, so since these both are not Union Territories, whenever you sail from or to J&K and Ladakh, you will charge IGST. Are we clear? Yes. Okay. Then if at all you do supplies within Ladakh, within the state or Union Territory, you will levy what? UT-GST and CGST. Are we clear? They said merger of Daman, Diu, Dadra, Nagar Haveli happened on Jan 26, 2020. If you ask me if you should remember the dates, I don't know why, because you also have MCQ, you never know. You might be asked certain weird things like these and you might be asked to tick. So please pay attention, just read it through and go. No harm, right? We don't want to be losing marks on all such questions. Cool. Okay, now they're talking about administration and powers of officers for Union Territory. So they're saying who can appoint, who can administer any matters under UT-GST. Okay, UT-GST same as SGST only, but here in your chapter exclusively Union Territory tax has been discussed, so we will discuss this. So they're saying any officer can appoint any other officer below the rank of an assistant commissioner. Okay, I am an officer, I can appoint another officer, but he should be below the rank of assistant commissioner. Point number 1. What are the powers of officers? Here they're telling you what power does an officer have. So a commissioner can impose certain duties and discharge. So if I'm the commissioner, I can appoint some officer and tell, see boss, you can do this duties. I can delegate and impose certain duties on him. Next, I am the commissioner, I can delegate certain powers. I have some power, I will delegate my power to him saying, you do it on behalf of me, delegate. Next, Union Territory officer discharge duties on any other subordinate Union Territory officer. I can discharge duties of any other lower officer. Appellate authority is again something like a court. They cannot discharge any of the powers or any duties or anything of the officers, is what they're saying. Then authorization of officers of central tax as proper officer in certain circumstances. So they're saying, can a CGST officer, if an officer is appointed under the CGST Act 2017, so the acts are generally like CGST Act 2017, SGST Act, UTGST Act and IGST Act and Compensation to States Act. So these are the number of acts that you have. But whatever is in let's say whatever is in CGST will mutatis mutandis apply. Let's say I am supposed to get registered under the CGST Act. It means it is automatically applicable that I will be registered under SGST Act also, I will be registered under IGST Act also, okay. Mutatis mutandis, we will be coming to that later. Now, authorization of officers of central tax as proper officers. So they're saying, can a CGST officer act as officer for UTGST also? Yes, in certain circumstances. Yes. Union Territory proper officer issues any UT/GST orders, also to issue CGST order. Okay, so generally see CGST plus UT/GST only is levied, right? So you cannot say only, I told you right, out of that 5%, 2.5%, 2.5%, both will be levied simultaneously together. So if at all I issue some order, boss you have to get registered, why I have to gotten registered. If I order something, then it means automatically even under CGST the order has been passed. Next, if at all a CGST officer initiates some proceedings, it means that the proceedings have already been initiated, and for the same issue a UT/GST officer cannot initiate proceedings. It's like duplication of proceedings. Next, order passed by UT/GST officer for proceedings with respect to rectification, appeal, revision, not lie before CGST. If at all, see, I am the officer. If I have passed any order, it has to come to me only. That cannot be solved by a CGST officer is what they are saying. So these are all about powers and authorization of officers. Coming to levy and collection of UT/GST. UT/GST is on intra-state, intra. So this is within, let's say I told you Ladakh to Ladakh. So this is within the Union Territory. So this will be UT/GST. If it is within the state, what will you levy? You will levy SGST, right? So you will levy UT/GST. Along with this, you will levy CGST. Fine, are we clear? This is on intrastate supply, except on alcoholic liquor for human consumption, because alcoholic liquor for human consumption has not been brought about under the purview of GST. Still the rights, the powers is everything under the local state governments. Now, UT/GST cannot be levied. So this alone, this cannot exceed, this cannot be more than 20% is what they're saying. So until any date, let's say they want to bring a highest tax rate. Let's say someday they want to bring about some 60% tax rate. So half of 30% CGST, 30% UT/GST they'll do, right? So they're saying it's not possible. Maximum rate of UT/GST can be 20%. Okay, right now, currently. Next, right now, currently, petroleum crude, high-speed diesel, motor spirit, aviation turbine fuel, and natural gas, all this is not under GST, but by notification under a later date. At a later date, someday this can be brought into GST. Electronic commerce operator to pay tax on specified categories. So here they're saying who will pay tax, that will be discussing very in detail in chapter number 16. Chapter number 16 is already on YouTube, and it is one of the lengthiest chapter. If you want to look into exemptions, you know exemptions, the number of pages that exemption has in your textbook is humongous. If you want to do it quickly, revise very fast, I finished the entire chapter in 52 minutes. Okay, so go check that out, and that is already on YouTube. Fine. Next, exemption from GST. I told you I've already discussed this full in detail, and that is again a revision video. That is not your class video. If at all you want any more conceptual understanding, but quickly in an exam oriented way. Okay, if you like how I'm teaching, and if you feel that you want a little more help, so if you're okay to do with the revision, if you're understanding well and great, amazing, I'm proud of you. But if you feel like you need a little more help, but you don't have a lot of time, and if you feel like you've been not clearing your tax loss paper, and you've been getting stuck, or you don't know how to study because it's so voluminous, then go check out our GST fast track course. The link is in the description. I will be covering the entire syllabus in less than 25 to 30 hours, and rest assured I'm not going to be skipping anything. 100% conceptual understanding. Cool? Yes. Fine. Payment of tax, I told you how will you do the cross utilization. Do you remember? Can we recall? Can CGST and SGST be friends? No, not at all. Fine. Transitional input tax credit. Can we be a little fast on this? What is transitional? Existing laws. Whenever you read the word existing laws, it means the pre-GST era. All the service tax, VAT, SENVAT, all this, whatever you had before the pre-GST era. This is your existing. This is your, so just a minute. So this is your existing GST. So what can we say? Let's say under the old VAT, okay, this GST came only in July 2017. Fine. But I have been a trader. My grandfathers, I have my business since past 100 years. So I was registered under the prior older indirect taxes, right? There, let's say my input tax credit. What is my input tax credit? Yes, very quickly, input tax credit. Input is my purchases, tax is the tax that I paid on my purchases. Credit is something that you can set off against your output tax liability. Whatever you owe to the government, you can set it off. Am I clear? Yes. So let's say you had a credit balance. You had a balance. Let's say I had a balance of, let's say, 10 lakhs in my VAT. Now, on July, let's say July 2017, I was asked to come under GST, right? This got abolished, right? Are we clear? This got abolished. Now, this 10 lakhs, whatever I have, can I just lapse it? Can I just like throw it away? It is the tax that I actually paid to the government. I cannot throw it away. So, this transitional input tax can be brought into the new law. Can be brought into the new law. New law, that is GST. So, they're telling us that you can shift the old tax credits that you had to the new law. They're telling us who can do it, when can you do it, what are the conditions for you to do it. So, if you listen to me carefully, in all this, the essence is going to be very simple. Okay. So, just listen to me for the next 1 minute. I'll be quickly telling you. So, I told you this 10 lakhs I have credit. I have to bring this to GST. So, first condition is that I have to be registered person under GST. In the new laws also, I have to be registered. Second condition is I have to be selling taxable goods. So, the reason to this is you cannot set off or you cannot take credit of the input taxes if at all you are selling exempt goods. See, here the sale that you are making is not subject to GST. Fine. So, when you purchase something, what are you going to set this off against? There is no tax only to pay, right? So, in such cases, the government has made it very explicitly clear that if you are selling a exempt goods or if you are not chargeable to tax under GST, you cannot claim this, you cannot use this credit. What will you use this against? This will just be a balance sitting in your account. You cannot set this off against anything, right? There is no tax payable for you to set this off. Fine, am I clear? So, they are saying even under the new laws, you should be a person who is going to supply goods and services which is taxable under GST. Fine, okay. Now, let's say in the older laws, maybe you were selling some exempt goods, you had some credit or whatever. When you come to the new laws, let's say the same goods became taxable. Then, whatever credit you had accumulated there at that point, you can bring it to this law. Fine, okay. Now, composition scheme. Let's say in the older law, you had some credit. Let's say you had 10 lakhs. Now, so this is taxable goods happened. Okay. Now, under composition scheme, the trader, manufacturer or any person is asked to levy tax rate at a particular fixed rate. You cannot collect taxes from the customer. This is the basic thumb rule. Okay. So, under composition tax scheme, you cannot claim input tax credit also. So, here they are saying you should not be registered under composition tax scheme if you want to bring that credit to the new laws. You have to be registered under the regular scheme. So, these are broadly like the very simple things. First, you should be registered under GST. Second, you should be selling taxable items. Third, you should not be registered under composition scheme because you cannot claim input tax credit under composition scheme by virtue of its nature. Fine. So, these are the simple things. Then here all what they are trying to tell you is you should have possession of the tax invoice. So, let's say for these 10 lakh worth input tax credit, I have only purchase bills worth 8 lakhs. So, to my GST, I can bring only 8 lakhs worth. I cannot bring full 10 lakhs because there has to be some authenticity, validity to do this. And then such invoices cannot be more than 12 months old. So, I will bring 100 years old invoices and say, see that day I had purchased this, now you give me credit. No, not possible. So, these invoices cannot be beyond 12 months and then I should have an invoice to bring credit into the new laws. Simple. So, these are the plain simple things that you need to clearly understand. See here, taxable. Now, under the new law, under the old law, you were selling taxable as well as exempt goods, but under new law, such goods are taxable. So, what is the prima facie understanding? You can claim credit when there is a taxable goods or services, right? So, when there is taxable goods or services, you will have to pay something to the government. So, when you pay something, whatever you have already paid to the government, you will minus that and balance you will pay to the government. Simple, very simple understanding. Okay. Next, switch over from composition scheme. Under old law, you were in composition. Under new law, if you are registering under regular scheme, well and good, please bring credit. But if you are registering again under composition scheme, then you cannot bring this transitional credit. Clear? Now, We are done with transitional credit. Next, advance ruling. What does this mean? This is a decision provided by the authority or appellate authority to an applicant. Let's say I am selling certain kind of rare goods, okay. I don't know what rate to apply. I'm not sure whether this is cotton or polyester. I don't know what exactly that rate I have to charge. So I have a question. I have some questions that I need to be solved. Instead of doing the wrong thing and getting punished, penalized later, I will do one thing. I will go to the authority himself and see boss, I am confused. I don't know the answer. Can you please give me an answer? Who will give? Authority. Which authority? Any advance ruling authority or appellate authority will give me a solution. So they can give you solutions on what matters? On matters that is clearly brought in section 97 subsection 2 or section 100 subsection 1 of the CGST Act. What are these two items? These are all these items. So if you have any doubt regarding the classification of goods or services, one classification. Second, notification applicability. The government released some notification applicability saying so and so items will be exempt from GSTs from so and so dates. But now you belong to that category, but you're not sure whether you actually belong to that category. So if you have certain doubts, questions to ask, you can please say, do I, is that notification applicable to me as a registered person? You can go seek clarification, simple as that. Next, time and value of supply. Please understand, this is a very important thing. If you get any question on advance ruling, they will and might ask. If your paper is very cleanly, cleverly set, they will ask you. You cannot ask advance ruling questions for place of supply. Clear? For place of supply, you cannot ask. If you don't know whether it's interstate, which state you're selling, your problem, you deal with it. You cannot go to the advance ruling. But if you have questions on time of supply, value of supply, you can go. So that is why I have marked in red. ITC admissibility, input tax credit, whether I can take credit, not take credit, is it under block credit, section 17, subsection 5 or not. All these issues if you have, please go ask. Liability to pay GST, whose liability should I pay, should he pay, is it under RCM, is it under FCM, whatever it is, you can go ask. Registration requirement, oh okay, you still have doubt whether you should get registered or not, please go ask. Whether any particular thing, anything that constitutes supply under GST, whether it is supply or not, if you want to ask, please go ask. So these are the items that will be addressed under advance ruling. Next, who will be the constitution for authority for advance ruling? Appellate authority. Authority, just the authority for advance ruling will have one officer from CGST and one officer from UTGST or SGST appointed by the government. Fine, clear. Appellate authority is one notch higher. If you don't get any answers from the authority for advance ruling, you can go above to the appellate authority and seek one more clarification from them. Chief Commissioner of CGST designated by the board and Chief Commissioner and Commissioner. So there will be a Chief Commissioner and a Commissioner. Both these people will be sitting as a advance ruling authority. Are we clear? Fine. So we are almost coming to an end. So get up. Yes. Are you happy? We are clearing this chapter so quickly, isn't it? Yes? Okay. So if at all you want to get a little more understanding, please rewind back, pause, get an understanding, listen to it again and continue reading. Fine? Yes. So I cannot be slow in this video because this is a exam oriented, exclusive capsule video which you need to, be on your toes. Fine? If I go very slow in this, then it's just as good as any other normal class. You will end up getting bored. This will not serve the purpose of a quick revision for your exam, right? Yes? Okay. Miscellaneous. I told you whatever provisions of CGST, it's applicable for IGST also. If you take registration under CGST, that doesn't mean you have to go and get a registration separately under IGST or get separately under SGST. Mutatis mutandis means in the same way applicable, in the same manner applicable. So, everything that you study, every topic, anything that is under GST will be mutatis mutandis applicable to IGST, SGST, everything. So, under CGST Act, you will get registration. Then it means you have registration under SGST. So, what are the, so all this, so these are the, this is like the entire framework. Whatever you do under GST will be mutatis mutandis applicable to IGST Act as well. Now, clear, come here. Who has the power to make rules? Central government. Who has the power to make regulations? Central Board of Indirect Taxes. Fine. This can come in your MCQ. Please be noted. Now, laying of rules, regulations, notification, etc., etc., you want to make certain rule or you want to bring some change or something you want to do, then under the House of Parliament, you have to lay it down for 30 days and both the Houses of the Parliament has to accept this, and the House of Parliament can actually suggest any modification, annulment, and then the bill will be passed, then it will be enacted in the GST Act, fine. Now, power to issue instruction, direction. Can we see instruction or direction? Who has the power? Commissioner. Commissioner of GST will have the power to issue instruction or direction. Removal of difficulty, CG on the recommendation of GST Council. Who will remove certain difficulties if there is some problem, some issue, or you are not able to understand, or GST was first brought about, right? Then there was a lot of confusion everywhere whether this is done, this has to be done, I don't know. Then in that case, it said if there was any difficulty, the central government would remove the difficulties, but within 5 years from the date of enactment of this GST Act. Fine. Okay, cool. Next, I will quickly summarize this for you. States, the goods and GST compensation cess. Compensation cess. Compensation means what? So the states were not ready to get into GST because they thought they will lose a considerable amount of revenue if at all they come under GST. So like I was telling you, because there was a loss to the government on transitioning to the new law that is under GST, the central government or whoever brought this law about promised the states that for the next 5 years they will be compensated for any loss that they will undergo just because of shifting into GST. That is called compensation cess, and this cess will again be collected as a part of GST. So here you can understand, because of the loss of revenue for implementation of GST, can you see, because of the loss of revenue, compensation cess will be levied along with supply of goods, services, along with GST, even a small cess portion will be levied. Then compensation cess will not be levied if it is for exports, and if the exports have been done under a letter of undertaking, which is generally called a bond. Then affirmation of this constitutional validity was given under this case law of Mohit Minerals Private Limited. What are the salient features of this compensation cess and how do you ascertain it? So let's say your base year was 2015-16. So this is point number 0. This is point 0. Okay. Now you have to identify the revenue. Let's say the revenue of one state is, let's say, 100, okay, for simplicity sake. Then you also have to see the projected revenue, 1, 2, 3, 4, 5. These are 1, 2, 3, 4, 5. Then what is the projected revenue? How much are these states actually aiming to receive? Every year they will have a projected revenue, right? Next year I will earn so much, next 2 years I will earn so much, next 3 years, right? That's the projected revenue. Then you will compute the compensation based on the projected revenue and also release the compensation. So to get it right, you can say, let's say the growth rate for this they have taken as 14%. Every year the standard norm that they've taken is 14%. The revenue will grow. So see here, identifying the revenue, let's say for that year your revenue was 100, growth rate was 14%. Then computation, who will compute the compensation? Now Karnataka state will say, see, I lost so much. So means what? Please compute, give me the compensation computation. Who will do that and who will audit it? It will be audited by Comptroller and Auditor General of India. And release of compensation every 2 months, on provisional basis but not on a final basis. Then proceeds of the cess shall be credited. Whenever you charge on the bill, let's say they collect cess, where will this be credited? Where will this go? This will go to a compensation fund account. Then after 5 years, I told you, I will just explain this quickly to you. So this is compensation cess, okay. They will collect compensation as and when they collect, this will go to the compensation cess fund, okay, simple. Now from this cess fund, they will distribute this to the states. So all these are your states. For how many years? For 5 years. How will this be calculated? You will calculate base year as 100 for next 5 years. Let's say 1, 2, 3, 4, 5. So they are taking a growth rate of 14% each year. 14% each year. So this will be the projected revenue. Every 2 months they will release the cess. Now at the balance end of this 5 years, let's say in the cess fund which we saw, right? In the cess fund which we saw, let's say this 1000 crores is still remaining. Let's say 1000 crores is still remaining in this fund at the end of 5 years. from 2017 plus 5, 2022. At the end of 22, this cess compensation will be stopped. It will not be given to the governments, right, state governments. So here, if this is remaining, then they are saying this will be shared between center and states if anything is remaining after 5 years. What is not included in the term revenue? I told you projected revenue, right? What will not be included? Whatever is not already included in GST, that is motor spirit, aviation turbine fuel, petroleum, high speed diesel, natural gas, alcoholic liquor for human consumption, entertainment tax. Because all this, the state governments are already earning taxes directly. These are still under the purview of state governments and state taxes are being levied. Okay. Now, projected revenue for any year, let's say for after 3 years. Now, this is 100, right? So, this is year 1, year 2, year 3, year 4, year 5. So, in my year 3, how do I compute? I will do 100 into 1 plus 14 divided by 100 to the power 3. So, this will be my projected revenue for year 3. Now, if I do to the power 4, it will be projected revenue for year 4. So, this is my projected revenue. Okay. Now, projected revenue calculated applying growth rate. This whatever we just did in our last step. Actual revenue computed. This is my actual revenue. Now, this is my difference, right? So, this is the amount that the states are liable to be compensated, because what is the projected revenue? They should have earned so much, but they actually earned so much. If they have earned less, then they will be compensated. So, this is the difference. This difference will be compensated. Fine. Now, every 2 years, sorry, every 2 months it will be compensated, right? So, at the end, let's say at the end of the financial year, let's say it is 2021, 22. So, until 3 months before they have been compensated. So, they had to get 100. Until January, they got only 80. So, this 20 rupees will be paid in the next year, that is in the subsequent year is what they are telling you. Clear? Fine. Okay. Crediting proceeds of the cess to fund, which I already explained here. This, whatever you collect cess from the customers or whatever, this will go to this compensation cess fund. Then out of this, it will go to the states. So, whatever amounts that are liable to be paid as cess will be paid from the cess fund. Then 50% of the remaining unutilized at the end of the transition period, at the end of 5 years I told you, if 1000 crores is remaining, then half of will go to center and states. Then half will go to center, half will go to states. They are saying notwithstanding anything given here in this, if at all anything remains, it can also be transferred to the consolidated fund of India. It can either do central government, state government half-half, or they can either just decide to put this in the consolidated fund of India. Then who will audit the accounts of the fund, who will do the audit and everything, who will take care? Comptroller and Auditor General of India. And then such accounts will be laid before both the houses of the parliament. Then any other provisions relating to cess, simple, just take note. Power to make rules, who has the power to make rules? I told you central government has the power to make rules. CG on the recommendations can make rules, anything that is particularly on the compensation, that is manor, levy, collection, whatever is related to compensation fund, the government can make rules. Fine. So, here we are, we have successfully finished our revision video for basics of GST. This was entirely for your exam purpose, and I hope you will be able to cover your syllabus in a quick way and you will do well in your exams. Promise me you will do well in your exams. All the best, study well and take care.